Welcome to Second Take, the show that takes a look at the issues behind the news. The grueling Nersa hearings into Eskom's application of 5 yearly hikes of 16% are nearing an end. Terence Creamer joins me to discuss some of the main topics and emerging trends. Hi Terence. Please place the current hearings in context for us and remind us what Eskom has applied for this time around.
Yes, this time around they've gone for a 1.1 trillion request to cover the operational primary energy costs and the returns on investment over the 5-year period from 2013, so from April 1 this year through to 2018, when the multi-year price determination period that is being discussed would come to an end. That really translates into a tariff of 16% a year over that 5-year period. So as you can imagine, there's a lot of opposition to that, but Eskom's gone to some pains to explain what makes up that revenue requirement. So they've gone into why they're saying that their primary energy costs are going to increase by 8.6% over the period on average, with coal going up by 10% over year on year over the period, why they think their operational costs are going to rise at about 8%. And you know, the key part of that, and the area that's above inflation in that operational cost, there's a lot of focus on the human resource dimension, but it seems to be a lot on the maintenance catch-up that they've emphasized in this application. And then they've got the very contentious issues around their depreciation charges and the return on assets are also included in that equation. And those are a major portion of that 1.1 trillion rand request over the period. And they're saying that would still require them to find another 200 million to fund all their costs over the period, because it's going to be more like 1.2 trillion over the period, 1.3 trillion that they're going to be spending over the period in keeping the lights on.
And the weak economic conditions South Africa finds itself in has been a key focus area for many of the presenters.
Yes, it is coming at a time, really at the worst possible time. You know, we've already had increases where the price has trebled. So we had about 20 cents a kilowatt hour, at the start of 2007, and we're now at 61 cents a kilowatt hour. That's what Eskom sells at. It's not what we as consumers pay, because a lot of us are behind municipal tariffs, and we also don't get volumetric discounts, etc. So, you know, we've had major price shocks from the electricity side, and we're coming into a period where South Africa's economic outlook is weak. You know, IMF came out last week with a forecast of around 2.6% economic growth. That's a downgrade from 3%. It's going to be interesting to see when Pravin Gordhan does his Minister Pravin Gordhan does his budget on February 27th, what his new growth outlook's going to be, whether it's going to be in that 3% range, higher or lower. And, you know, but no one's really expecting this economy to shoot the lights out. And sitting through the Nersa hearings, we had every sector of the economy, whether it was steel or manufacturers or clothing or retailers or property owners or miners, and the farmers coming through and saying, look, it's not just the Eskom increases that we're facing. We're facing weak terms of trade, so for instance, commodity prices are not what they were. And we're just having input costs rising across the board. So we're having this electricity threat at 16% a year. We've got water prices increasing at double-digit rates. We've got municipal rates coming at double-digit rates to us. In Gauteng, you've got the prospect of e-tolls as well. So there's a whole sort of issue of cost pressures coming for a lot of business, and they aren't able to pass those costs on to their customers. So there's a margin squeeze, and they say that something is going to give, and ultimately most of them threaten that the most obvious area where it's going to give, because you're going to have to continue if you're a deep-level miner, and you 3 kilometers down underground, it's safety critical that your electricity stays on. So you're going to have to absorb that electricity cost, but you're going to look at whether you can sustain certain shafts, and that means jobs. And there were some very frightening statistics that came out this week about how many jobs could be lost at certain operations if this price came through along with all the other prices. And I didn't even mention the wage increases that have come through that have been above inflation. So we're in a weak economic patch. Our terms of trade have deteriorated, our import competition has increased, and now we're looking at really serious increases in a component that used to be a comparative or competitive advantage for the South African economy. It's been eroded already, and the compound effect of eroding it further has been really strongly highlighted during this hearings process.
Besides disquiet about coal prices and Eskom's returns, two other major themes to emerge have been municipal tariff premiums and unabashed appeals for sector-specific determinations.
Yeah, it was quite interesting. Obviously coal, because it's such a big feature of the application. It's over 340-something billion rand of the trillion rand. Becomes a major feature, and people are saying, is there no way you can decrease those coal costs? In fact, there were presentations which suggested that those costs should be brought down from the 10% level to around the 6% level. But if you see what happened in Cape Town this week around what the coal industry is saying, they're saying there's serious issues. There's cost pressures on them, and there's supply contracts that they're going to negotiate with Eskom. They're also not looking at just inflationary increases. They're looking at something bigger. So we're going to have some sort of what Eskom's calling a pact or a compact. And the mining industry indicated this week that they're open to discussions. But there are cost pressures on their coal side. And it looks hard, difficult to contain them even to the 10% type level that Eskom's talking about. So that coal, obviously, and the returns, there's a lot of debate about the returns and whether Eskom should be asking for this and whether it should be based on assets that have been revalued to sort of a replacement cost, or whether it should be based on historic cost. And there's a lot of unhappiness about the WACC or the returns that Eskom is seeking and basing the equation or the request on. But over and above that, business and community groups are saying, behind the municipal tariff walls, it's just very opaque, it's very confusing, and we're having surcharges and premiums over and above what Eskom is charging, which are just becoming very difficult to bear. And we've got the one presentation suggested there's hundreds of these tariff categories, if not thousands. There's lots of municipal distributors. There isn't a standard national tariff, and there's an appeal to Nersa to try and sort this out, because some consumers of electricity are getting it directly from Eskom, and they're producing a certain product. The chemicals was used as an example. Over the fence, another producer of chemicals is unfortunately behind a municipal tariff line, and is being charged a major premium, 10%, 20% more than what the producer on the Eskom side of the fence is being asked to bear. And they're saying it's becoming an anti-competitive issue. So some guys are really battling to compete with even domestically. But then you've got the import competition on top of that that's coming in. That is very difficult. And then obviously every sector feels they're important and special. So you had the gold, the platinum, the coal, the clothing, the textile, and just you could name them, property, saying why they felt, differentiated deal, and farmers as well, why a differentiated deal might be good for their sector, because it would sustain jobs, and they are identified in the government's policy as key growth and job creation sectors. So you had, ironically, everyone attacking the special pricing dispensation that Eskom has with the BHP Bulletin on the one hand, which I think Nersa has been asked to review its prudency, and we'll hear a lot more about that this year. And there does seem to be a lot of justification for why people are unhappy with that. But on the other hand, you had everyone asking for a similar deal for themselves. So it was a very interesting dynamic, beyond the coal, beyond the returns. This issue of the municipal tariffs really does look like a serious problem. And then you've got people asking for special dispensations all round.
Nersa now has a few weeks to finalise a few outstanding hearings before getting down to making a decision. Which way do you think they'll go?
Well, that's the $64,000 question, and everyone that presented this week was saying that it wouldn't like to be in Nersa's shoes, because it is a difficult one. The economic conditions, as we spoke about earlier, I think are a major consideration, even though it's not within Nersa's ambit or mandate to even really consider that. They've really got a fairly tight brief, and they need to consider what is the fair revenue allocation or allowable revenue for Eskom over this 5-year period. One of the things they will have to look at is whether it should be over a 5-year period. I think one of the few of the presentations said we should just do 1 year and do a whole review of all the policy loose ends and then come back and look at this again. But I think Eskom has made a strong case for bringing some certainty as well, so over a 5-year period, and I think Nersa would also like to bring some certainty. But that is one of the issues. I think Busa made the point, that's Business Unity South Africa, that if it's going to be higher, rather have it for a shorter period over the normal 3-year horizon. So that's closer to the 16%. If it's going to be closer to the sort of 10% range, then we can sort of stomach a 5-year period. So that's one of the considerations Nersa will have to make, and it's going to be interesting to see whether they go for the full 5-year or they go back to the 3-year or they make it even a shorter period because of these a lot of policy uncertainties, a lot of economic uncertainties. The other thing is what will the number be? And I think everyone wanted, Nersa councillors were wanting clarity on what different sectors felt was a fair number. And as I said to you, most people are looking at an inflation contained type increase. Those that have really interrogated the model are probably suggesting inflation contained is unrealistic. So I think we're going to see something above inflation. Definitely is going to see something above inflation. So I think we're really looking at a range between that 10% and the 16%. Eskom kept making it clear that they are only applying for 13%, that the 3% balance comes from the RPPs. That wasn't really deeply interrogated whether those RPP figures, 78 billion for RPPs, was a justifiable figure. But it's in the amount, and we do know that contracts have been signed for the first renewables. The second bid window is going to close quite soon. The third bid window goes out later this year, and that will all be within this envelope. So there will be costs from the RPP introduction. So I think it's going to be a hard call, one, on how long, the duration of the increase. I think Nersa is going to really have to apply its mind on that. And secondly, obviously the big thing is the number, because the number is going to have a lot of an impact on a lot of sectors. A lot of sectors have spoken about tipping points, and even not just business sectors, but also social and community groups are saying really electricity is becoming quite a difficult thing to manage at a household level. But we'll know the answer on the 28th of February.
Thanks. That's the Second Take show for this week. Thank you for watching, and join us again next time for more news analysis.